Hi, welcome to the Market Alert for Monday, the 26th of September 2022. There's a huge amount of news to get through in this morning's Market Alert, so let's get stuck in. Friday's news, big swing in dollar index after sterling decimation of weak global data is the main one. Contraction and recession concerns of PMIs hit sentiment, so they were higher than forecast on Friday. Stocks tumble to session lows the moment Powell opens his mouth at today's Fed event. That was on Friday at 7 p.m. Futures crash, stocks at 22 lows. Yields dollar explode as UK stimulus plan sparks global market panic. More on that in just a moment. The Fed is finally seeing the magnitude of the mess it created, but at least I suppose in one sense it's doing something about it by continuing to raise rates, where in the UK the decimation of the pound is purely because of Bailey's inaction in raising rates. But if the pound continues to fall as it's done overnight, then he's going to have to take emergency measures and actually make a significant increase in interest rates. UK markets implode after Truss unveils historic tax cuts as the UK economy slides into recession amid soaring prices. You see, the problem is they've used interest rates as the tool to try and save the economy since 2008, and obviously we've gone all the way more or less down to 0.25 for the UK, 0 for the US, negative in Europe and Japan, and it's not worked. And of course now they've got hyperinflation or inflation and stagflation on the horizon, and the only way to deal with this is to increase rates. Well, they've just got rid of the most valuable tool that they've got, so now we're going for tax cuts, and of course they're only going to benefit the rich. They're not going to be immediate because they're not coming in until April 23. And of course, the pound says, well, you're not doing anything, are you, to actually stop this inflation? So the dollar rises, the pound gets monkey hammered. Bank of England must do a large emergency rate hike to avoid a total disaster. Exactly what I was just saying. And overnight news, pound sinks to record low against the dollar as the Chancellor and Prime Minister defend mini budget. We've been down to 103. We're going to go to parity. There's no doubts about that until Bailey steps up to the plate and actually does something about increasing rates significantly to protect the pound. If not, the dollar continues to move higher, crushing all other global currencies, and yet the dollar is worthless as much as the rest, but of course it's the world reserve currency. So this is going to add also to the price of fuel. Despite the fact that the oil price has dropped, the oil is traded in dollars, so you're going to be paying more for your fuel, even if you don't see it go up at the pump, which I'm sure you will do soon anyway. Economic news for today. What have we got? Housing news came out at 0.7, and let's have a look, see what we got. The juicy stuff. The criminals out at 2 p.m. What else have we got? FOMC, Collins and MPC member. We need Bailey out, not these other ones that are not really known. And FOMC, Mester speaking at 9 p.m, just after the markets close as well. Gold-silver ratio is moving back to the upside. The price of silver crushed overnight as the dollar continues to move higher, up to 114 something, I think. So yeah, let's go ahead and have a look and see what's going on and what's been happening overnight, as well as Friday's trading session. So in the Dow, you can see moving lower on Friday, and we've got a new low of 29,242, way below the 30,000 target now. As you can see, price is taking out Thursday's low, which was just below the 30,000. We need to move up to the monthly chart to see where we are. We're at the 50 bar moving average. We've just gone through that. We've got 78 and 89 down here, where we start to see some sort of support coming in for the Dow at this level. Let's just grab a price on that, 26,063. The weekly chart, let's just have a look. You can see we're through the 200 MA in this one as well overnight. The start of the week already started seeing prices move sharply lower there. In the 30-minute chart, you can see that we're starting to move back down, having moved higher to begin with, trading up to DP and close. The market now moving back down towards Friday's low in the 30-minute chart there. The low crucial, as I mentioned every time in the market alert, to try and hold the market at this level is very important. through 38, through 50, and just coming through 62 and the area where the last buying was, where we saw the market oversold and demand and a crossover, retracing there only slightly, so weakness dominating. As soon as we close back below the 20 bar moving average in the 5, the market is now moving to the downside. That said, don't be surprised if you do see a trading session where they manage to reverse prices, because action is taken by the central banks to move prices back to the upside. So trade what you see, not what you think is going to happen. All I'm doing here is pointing out the pertinent areas of where the market could go to as the sentiment remains. If the sentiment changes because of external factors, i.e. the central bank's intervention, then the market will move in the opposite direction. So we're always, like I say, trade what you see, not what you think may or should happen. In the German DAX, also moving lower, as you can see, the lower Friday taken out also, and the price is moving lower overnight. We're coming down to the low already, aren't we? So let's have a look at the 30-minute chart. Actually, before we do that, let's get to the bigger picture of where we are. You can see that we've got from here to here, we've got a 50% retracement that the market is just approaching, which could be a level of support. If we break this, then we go from here to here, projected back to 89, which takes us down to the 11,873. The 12,000 level is going to be a very major support level for the DAX, along with 13, which we've seen over the last few weeks and months, where that has been a significant support for the German DAX. So yeah, the daily there taking out Friday's low in the 30-minute chart. You will see there's the low, and we're already trading at it and just slightly through it as well. So it's important that the market holds at this level in order to try and move back to the upside. So at the moment it's only 6:30, as half an hour before the futures open in Germany. And in the 5-minute chart for the German DAX, you can see overnight the market gapping lower, trading up to the close, and then moving lower, and then before you get the retracement again and divergence. The same pattern all the time through these markets. You can see now we're currently oversold here and at the low, and the momentum is starting to slightly move back to the upside there, so a bit of a slowdown in momentum there. Speaking of trades, let's just have a quick look at last week's and the total from the 19th of January, as we do on a Monday and most days. So for last week, total trades, profit 640.36, profit factor of 4.25. We've got 69 to well, it's actually 70-30. Good week last week. Was missing for 2 days, which is a shame, which is why it's less than the 1,000 that we've been seeing for the last few weeks. But the total, of course, as you can see there now, 40,000 balance there. Total net, we started with the count of 10,000 is 30,207. So we've now just breached that magical number, as you can see there. And the equity curve continues just to move nicely to the upside there, as well as the profits continue to come from trading what you see in the charts, using the overbought, oversold, and then all of the other techniques to find those trades. In the S&P, you can see the market also similar to the Dow, moving to the downside, but not taking out Friday's low yet. Look at that in more detail in the 30-minute chart. You can see the low is there. The DAX obviously weaker at the moment, but the S&P also showing a bit of weakness there, coming back to 62.78 area at the moment. Meanwhile, in the pound, of course, has been hammered because of this so-called mini budget for the rich. As you'll see there, market down on Friday, and overnight there you can see the reaction to the mini budget. Market sideways, managing to move higher initially, but of course the pound coming under pressure on the Asian FX markets. At the close at the moment, needs to hold at this level. If not, it will certainly need to hold at the low. Speaking of currencies, GBP, JPY, well, just absolutely monkey hammered, as you can see there, down to 149 overnight. And in the 30-minute chart, you can see there that the Asian market absolutely crushing the GBP, JPY. Also down on Friday as well, so a continuation there. The pound dollar, we've been down to 103.52 on the ETX platform, but I have seen this on others down at 102 as well. But we're going to parity, aren't we? They're going to have a look at it and test it. But at the moment, it's bouncing off this area in the daily chart. In the 30-minute chart, you will see the stopping volume there, climatic volume, as the market has bounced off this level down at the S2. So a big sell-off there for the pound to begin with, but now finding a bit of support. In the monthly chart, of course, I can't go any lower, showing at the moment trading at the 105 area. But like I say, keep an eye on that parity. They're certainly going to go there if Bailey doesn't actually find his balls and actually increase interest rates, which of course is going to crush the housing market, which is going to have, exacerbate the recession. But he's not going to have much choice. The thing is, with all of these central bankers have painted themselves into a corner now. They're damned if they do and damned if they don't. And that's a result of printing huge amounts of money and lowering rates for the last 14 years. And one day it was going to come back and haunt them, and now it's turning into a nightmare. And finally, in the metals markets, under pressure, of course, because the dollar's strength. In fact, let's have a look at the dollar's strength before we look at the metals. 114.3395, so nearly 114.50. 120 is the goal and target of the dollar. If it goes to that, we're certainly going to parity. But you can see that we've more or less got a parabolic move in the US dollar over the last few days. And that's because, as I said in the intro, the Fed are increasing rates, whereas Bailey is asleep at the wheel. There's no doubts about that one. And also the forecast for 18% inflation by January. And rates are what, 2.75? Well, good luck with that one, Mr. Bailey. You got bob open, no hope, unless you actually start to increase rates. This is the problem. And also, just another aside, if I can find it, I'll add it in post-edit. But we're looking the mini budget and the cost of living crisis, printing money for the gas companies and obviously to cap the price for the public, is set to run to 234 billion, which is added to the debt as well. We know that the current interest payments on the debt are 85 billion per month. And when they talk about, we need to get the national debt down, take no notice, it's complete and utter BS, because they can't even service, well, they can only just about service the interest payments. Again, all smoke and mirrors of what's really going on behind the scenes when you actually peel away the layers and see what's really going on. So again, another 234 billion added to what is nearly 3 trillion anyway. But 85 billion a year is the interest payment on the UK debt. So yeah, and of course you increase interest rates, then that increases that. Knock-on effect to the housing market. The tool that they used, as I said at the intro, was their main one, dropping interest rates, keeping the illusion alive, is they can't use it because of the inflation. They're trapped. Anyway, silver heading down as you would expect, but not being crushed, which I'm surprised by actually. So I know that the physical silver is leaving the LBMA and the COMEX by the lorry load. Somebody's taking it and hoarding it. Which is great, because that's what I've been doing for the last 10 years anyway, on a personal basis, because you want assets that are real and you want them in your own possession with what's coming down the line over the next few months. 30 minutes, you can see there, below Friday's low, with silver spike down, but it hasn't recovered, whereas gold has come off the lows, which you can see there. And in the 30-minute chart, you'll see the shakeout there, and not back down towards the overnight low, which silver is at the moment, which is why the gold-silver ratio is moving back to the upside. Crude oil moving lower, which is a bonus as it's traded in dollars, down at 85 there at the moment, so that will help, despite the fact that the pound is moving to the upside. To the downside, and the US dollar obviously up strongly. So there we go. That's a roundup of events and what happened during Friday and what's happening overnight. Let's see what happens when DAX opens at 7 a.m. That will kick off things as far as stock markets are concerned. Let's see how the carnage unfolds. I expect it's going to be shot down in flames, and then they'll do the best to try and recover it. That's the general picture and method during these times. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.